Okay, thank you everyone for joining me today. Good morning, good afternoon, depending on where you are in the country. I am Greg Yotis. I am the Senior Sales Director here for Life and Annuities at Pinnacle. Um, Today's topic, we're going to talk about the strength and unlocking that strength of the Nationwide Peak 10 annuity, fixed indexed annuity. So before we get into that, what you should be seeing on your screen, just wanted to highlight our upcoming Pinnacle Championship Series, which is going to be held March 12th in Las Vegas, Nevada. For those of you who attended our last championship series, great event. Lots of really good information as far as Medicare, ACA, annuities, life, and ancillary health products. It is going to be at the Agilent Stadium where the the Las Vegas Raiders play. So great facility there. Lots of good topics, a lot of good commingling with agents. So if you're interested, please reach out to me or reach out to Pinnacle, and we can get you registered for that event. Always fun to be in Las Vegas again. So with that, we're going to get turned over to our topic for today. So, as I said, we are going to be talking about the Nationwide Peak 10 fixed indexed annuity today, and its possibilities for growth and market protection. So with that, we're going to cover why you want to work with Nationwide and why that's important. We're going to talk about the features and positioning of the Nationwide Peak 10. Nationwide Peak 10 will give you some sales ideas, and then we'll take some questions. If you have any questions, please feel free to use the chat box in the webinar, and we will answer those at the end of the presentation. Everyone is on mute, so please use that chat box. Okay, so why Nationwide? Nationwide's backed by the strength of a Fortune 100 Best Workplace. It's an AM Best A+ rated company, so it's very strong across the board financially, and everyone knows the name. It has that brand recognition. Everyone sees their commercials, can relate to Nationwide. The financial strength, just looking at it, the capital strength is impressive. It's 31 as of 2022, 31 billion, and that's since then even increased. Again, a Fortune 100 company, in the billions across the board, total assets, net income, total investments. So it's a very strong company. Clients can feel very safe and secure with putting their business with Nationwide. Couple things about the strength of Nationwide as far as their products. They are a number one writer of variable annuities, eighth largest writer of fixed indexed annuities, number one in fee-based annuities again. Life insurance, again, good mix of annuities and life insurance with Nationwide, eighth largest life insurance carrier. And really concentrate, one of Nationwide's big niches is concentrating on retirement, which this Peak 10 product really helps with. So introducing the Peak 10, we're going to look at some of the, market protection that it has, potential growth opportunities, some specialty protection for the spouses, and what it looks like for the guaranteed income. So the Peak 10 is designed for clients if they're seeking principal protection and upside market potential. With the fixed index annuities across the board, the great thing is you can participate on upside potential, but your principal's protected. You're never going to lose, never going to have a negative return on your investment. So, looking for higher interest rates than regular, fixed options. So the fixed index annuities give you higher growth potential than if you're looking at either a fixed or a multi-year guaranteed annuity. And you don't have to worry about that market volatility. And those people retiring or have money in 401ks, this product is perfect for rolling it over and getting that guaranteed income that people can feel safe and secure during retirement. So just a little bit about the product details. It is for individuals, single purchase. So you're going to put a one-time premium payment in there, and then you're going to get the benefits of the cash accumulation, and if you have the income rider, the guaranteed income rider. Minimum investment is 25,000, both for qualified and non-qualified. And then, for the maximum issue ages, which is pretty nice here, it's 85 for the annuitant, but the owner has no age limit. So that's pretty impressive. And then, plan types, like I said, non-qualified is available, and all of your qualified IRAs, and even you can have remainder trusts or 401A, are the plan types that this product will accept. Um, Death benefit's always going to be equal to the cash value. Um, and they do have some tiers, once you go above 100,000 for some of those caps and participation rates. It is a 10-year product, so it has a 10-year surrender schedule, which you see there. But you do get the free withdrawals, 10%, which is pretty standard for fixed index annuities. They have a long-term care waiver, so if they, become, need long-term care, they'll waive the surrender charges. Same thing for terminal illness, they'll waive it for the surrender charges for terminal illness. So when you look at the quality of the investments in there, they really give you really great options. The growth and value balanced index, so which kind of gives you a little bit of a diversified index. If you're looking for more of a higher upside potential, you have the global H factor, J.P. Morgan cyclical index. That actually is a little bit more of a, depending on if you're looking at the market conditions, but still kind of a diversified index. And then you have your tried true S&P 500 composite, which is always a good option. And then if you're looking for somebody who has a little bit more conservative risk profile, you have the S&P 500 daily risk control index. So, the need here is what we're going to kind of look at is if you have a 65-year-old couple and the spouse is expected to live into their 90s, what happens to that money when you start taking the income or when one of the spouses passes away. So it does have a joint option, which allows the annuitant contract owner to name the spouse as the co-annuitant and allows the death benefit to be paid to either spouse, no matter what, who passes first. So even on qualified money. So the benefit of that is, if the husband has just for an example, if the husband has the annuity, but they name the wife as the co-annuitant, and the husband passes first, that'll be, the death benefit passes to them, and they can actually continue that policy. So nice feature there for those couples in retirement, and one less thing they have to worry about actually getting the inherited annuity. So here's just a little bit of a example of that. So on the left-hand side, our examples are Mark and Lisa. If Lisa's named as the co-annuitant and they have the joint option, and Mark passes away first, she can either take the lump sum payout, which is the normal, but she does have the option to continue the contract at that death benefit level. So she doesn't have to, get an inherited IRA and totally switch it to another product. So that's the benefit of having the joint option elected. And the right-hand side just basically shows you if they don't have the joint option and her named as the co-annuitant and he passes away, no death benefit is paid, and there's no change to the contract. So Lisa's beneficiary, just passes the mark, is named as the beneficiary, and it just passes as an inherited IRA. So having that joint option for the spouse is very advantageous for the spouse going forward after one of them passes. It's just a ledger page for a minute, and we're going to take a look at an actual illustration. But this basically ledger page says in this situation, 65-year-old, they put in 100,000 in there. gives you your surrender value, so it calculates the 10-year surrender charge there. The death benefit's always going to be equal to the cash contract value. And then this basically gives you, if you don't select the enhanced, which we'll get to, income benefit, your income is just going to be based off of this 100,000. But as you see, the potential for the earnings here, this policy continues to grow with no downside risk of losing or having a negative return. So you can see here it grows to 298,000 by year 10. That same 100,000. So with the guaranteed income for life options, you have two options for retirement income. So the first one is the guaranteed income solution. Those are going to be for clients who are unsure if they're actually going to need to take retirement. It is at zero cost, so it's totally built-in feature into the product. And then like I alluded to before, the bonus income rider, that's for the people that know they're going to be taking the income and they want the higher roll-ups and payout percentages that gives. And like on the, what we advertise for this product is it now has a 25% bonus, which is paid day one, and then an 8% roll up for the first 10 years until you start taking the income. So we're going to highlight that going forward. So first, just want to show what it looks like for those people who don't necessarily know if they're going to take the income option, but want that feature because it's automatically included. So basically, it's going to give you, for in this example, we're putting 100,000 in. You get and the minimum age for it needs to be age 50, but you get that 4% guaranteed simple interest, which is going to grow your contract value no matter what. Now, in most cases, your contract value will outperform that 4%, but in the years that it doesn't, you're at least getting that 4%, so your contract value continues to grow. And that means that your income benefit base continues to grow. So in 10 years, when you're ready to take that income, it's now off that larger contract value amount or income base amount because you got that 4% interest. So Samantha here, she's age 65. She selects, just like we said here, the basic income option. She's going to get that 4% withdrawal based on her age, since she's 65 and she falls into the 60 to 71 category. So she's getting a 4% withdrawal percentage. She'll get that 4%. She'll get $4,000 of lifetime income off of that 100,000. Right after 15 years, she's already received $60,000. If she waits 10 years and lets that 4% continue to compound, now you see that her 100,000 has grown to 140,000. She's a little bit older. She's 10 years older, so she falls into this 72 plus range. So now she's getting 4.5%. So now that income for life is going to be $6,300. Over a 15-year period, she's already received 94, basically her principal, 94,500. So nice feature to have, like I said, for those people who are not sure if they're going to be using the product for income, definitely. So it gives them some flexibility and still has that guaranteed lifetime feature, which is strong. And this is just showing you the ledger pages. I'm going to skip over this because I'm going to give you, open up an actual illustration and show you some things there. But here, just basically going to show you, in this case, we're doing 500,000. It actually allows for growth here in the income amount. So even though she starts out at 34, that income can grow to 52. Cumulatively, the last column always shows cumulative. On her 500,000 that she put in, she's by age 85, she's already received $2 million in income payments. So really, stretching those dollars and making that work, that 500,000 work for you in retirement. And with that, with the growth, you see the death benefit still continues to grow, even with the income coming out. and it's almost double of the income that she paid. So $4 million in death benefit in this scenario, just basically derived off of that $500,000 contract value. Now the bonus income rider, which is really the steak and sizzle to this product. Like I said, you get a 25% bonus day one on your money. So in this scenario, you're looking at 25. Your 100,000 is now worth day one, 125,000, and then you have the 8% simple interest, which continues to grow until you start the income. So for the first 10 years. So if you wait the full 10 years, your income base really dramatically increases, and the income base is where the income is derived from. So a little bit of a case study here. So Darren, he's age 65. He wants to have guaranteed income. First scenario, he puts in his now the numbers here are a little off because the presentation hasn't been updated, but that should be 125,000 because it's a 25% bonus. Just ignore that, but you see he's 6.25% withdrawal percentage, and then his lifetime withdrawal amount would be $7,500. If he waits 10 years, of course it's going to grow. He's now getting a higher withdrawal percentage, higher base, which calculates into a higher income. So and he's 10 years older as well, so he has a higher withdrawal percentage. So just hold on to that. When I get through it, let's go right to it now. So what we're going to show here is our example illustration. So this is an actual illustration. You have your summary section, which summarizes everything that the product has. So we have a male 67, Pennsylvania. It's a IRA, so it's retirement money. Could be coming from a 401k, could be coming from an existing IRA. Purchase payments $200,000. The rider, even though it's a great rider, like all income riders, you gotta, any of the enhanced ones you gotta pay for. So it's a 1% charge from the cash value, but what they're getting for it is a 25% bonus, and then a minimum of a value roll-up rate of 8%. So every year for the first 10 years, they're going to get that 8% on their income base. So where else can you get 8% guaranteed out there right now? Don't know of anything that does that. And then we're going to start the income at age 73 since it's qualified money, and you're required to start taking your required minimum distributions at age 73. We have two indexes here selected. I generally choose this S&P 500 average daily risk control to help support that 1% fee each year. And then you have your global age factor index at 75% for some higher growth potential. And the reason why, when you look over here at the cap, 9.5% for the daily risk, but this participation rate of 265% really exacerbates the returns that you're going to get on that global index. So, and we'll take a look at this, just kind of showing all the summary information went through. So if you look, they're going to give you the most 10-year repeating, so you can see exactly what the indexes would have done based on previous returns. So in this case, we put in the 200,000 at age 67. Death benefit stays the same. Contract value, 250,000, right? That's 25%. So you get 50,000 day one on your income benefit. And then if they wait, you're going to see 8% each year. That's how the income benefit increases. And then starting at age 73, they're going to start getting, you still have some really good earnings potential here with the indexes. By the time they're ready to start that income, they're at 350,000 in their income benefit. So that's 150,000 more. They're going to get 28,576 for the rest of their life at a minimum. So, and then you still have your, you have the income coming out, so you see your cumulative withdrawals here calculated, but then your death benefit continues to rise because you have the earnings of the indexes keeping that cash value to continue to go, even though you're taking that income out. Now, if you want to see worst case scenario, this you can go down to the guaranteed option. This just shows if they had 0% returns going forward, they're still going to get that minimum of 25,346 or 345 because they didn't have any gains in the beginning here while they were waiting, but they still start out at 350,000 because of the guarantees that are on the income bonus. So it really protects you from any kind of market volatility. And even if the account value goes to zero, they're still going to get that guaranteed income. So even on their 200,000, I mean, at age 93, they've received 532, more than the principal that they put in in income. So really, just very high returns, great lifetime income with no stress of market volatility. So really, I always just call it a personal pension because that's really what it is. So let's go back to the presentation here. That's just what we went through. So a couple things about that bonus income rider. You need to be between the ages of 50 or 45 and 85. Cost, like I said, is 1%. Now, if you do the joint option on the rider, so both annuitants are going to continue to get that income. There's a little bit higher of a fee, 1.3%. And the income would be a little bit less, but that's covering 2 lives with the joint option. So, just to summarize kind of what we went over, principal protection, right? No loss against any kind of market volatility. You have the growth potential with the guarantees in the income rider that you don't have to worry about. And then you also have the growth potential with the indexes. You have some spousal protection here with the joint option for the death benefit. And then there's guaranteed income. Like I said, this product is great. I don't see any annuities out there that can beat the income that this generates. So, great guaranteed income for those retirees that have large sum of money, or even 25,000. They just want to get guaranteed income. It can make a lot of sense. All right. Don't see any questions in the chat right now. But if you want to put one in, I'm more than happy to answer any questions. Always give myself a call here on the desk. My extension is 7105. I'll be happy to help. If you have a scenario, we can run those illustrations for you and explain it to you, similar to what we did today. We can get you appointed. Anyone who's interested in getting appointed, you can send me an email or give me a call, and we'd be happy to do that so you're ready to go the next time you have a retirement guaranteed income situation and you're looking to place that somewhere. So thank you, everyone, for taking the time to be with me today. Look forward to speaking with all of you, and have a great rest of your day. Thank you.